Hey guys, welcome back. End of the month, it's the last day of November. We're moving into December tomorrow. We're gonna talk today about this weekend and into next week, and a lot of stuff's happening in the freight market. December is always an interesting month because it drives what happens into January, into next year, but it also has a lot of things happening with drivers going on home time for the holidays. So with that, we're gonna invite Zach back. Zach, welcome back.
Thank you.
So you want to tell us a little bit what's happening, what you're seeing in the market today?
So right now what I have pulled up is the outbound tender market share map. And what that is essentially a measure of total volume as it relates to the rest of the country. Think about the country as a pie. Every piece of the pie has some sort of amount in it. So as these dark blues show up and reds, that means that they are gaining market share when it turns dark blue and losing market share when it turns red.
And that's because you're looking at the weekly change.
Yes.
And so right here, he's got weekly change pulled up. It doesn't mean if you took OTMS and just looked at it without the weekly change, it doesn't show the change. It just shows overall percentages.
Overall percentages.
But this, what you pulled up is the weekly change index.
Correct,
right?
correct. Thank you for clarifying the. So whenever you see these dark blues show up, that means that they are increasing volume relative to the rest of the country.
So that means if I look here at the map, Chicago Metro, Joliet, the pie, if it was a pie, is getting bigger. The slice of the pie is actually getting bigger.
They're getting bigger pieces
relative
of pie.
to the pie stays the same size, but the pie shape actually gets bigger.
Exactly. So Joliet and LA, and you might be asking, why is LA and Joliet the two biggest markets, or the most rapidly increasing markets in the country? Well, one of the reasons is that we've been watching over the past several months this huge influx of port volume come into the LA markets. That's in response to the tariffs and also into the kind of the holiday retail push. It's typical this time of year to kind of have all this retail come into the market, and then it gets distributed throughout the country. A big thing is where it gets on the rail and heads up to Chicago, and Chicago is kind of a DC for kind of the eastern seaboard, if you will.
So Zach, real quick, because it's on rail, it's not as time sensitive. I think you said something yesterday, last couple of days, is if it hadn't hit the port by now, it's unlikely to be into retail shelves by Christmas, right?
Correct. So they basically like run out of time to make it to the store shelves at this point for anything that's coming from China right now. So it's still going to come into the West Coast, and then it's going to get out here, and then it's going to move around. But we also have a different aspect of what's happening this year, and that's the tariff impact. So you can see here, JP's pulled up the Headhaul Index, and you can see that it kind of died out. And what the Headhaul Index is telling us is the discrepancy between the outbound versus inbound loads. So the more outbound loads you have in comparison to the inbound loads, the higher the value. So when a market operates very high for a long period of time, they run out of trucks eventually, because when the outbound exceeds inbound for too long, you essentially just don't have enough trucks coming into the market to take care of the loads. We saw this kind of calm down because carriers had figured out LA is the hot part of the country this year. So they're going into the market, making sure that all these loads are covered because they pay a lot. LA, anything that's going intermodal or across the country is going to pay a lot more per mile. So you see right here the last day, a huge jump in the Headhaul Index, an indication that outbound volume has exceeded inbound volume excessively.
And that could be a function of high imports, but it also be a function of drivers were off for Thanksgiving, had cycled through other parts of the country, and now we're seeing the market wake up out there again.
It is waking up a little bit, but don't get fooled because it's the end of the month. The end of the month always has this kind of end of the month effect, if you will, where shippers kind of push their inventory out and want to they want to recognize as much revenue as humanly possible so that their month looks good and everything is all hunky-dory. So this may be kind of a temporary move, if you will. But on to the next point that I wanted to make today. What we're going to pull up right now is the FreightWaves Baltic Index. And what this is these are two lanes these are maritime lanes, and they are container shipping rates for 40-foot containers coming from China to North America's West Coast and North America's East Coast. So this green line right here is the spot rate for a 40-foot container from China to North American East Coast. It's at $3,683 this week. And then the West Coast rate is at $2,452. And then the difference, the Panama spread as we call it, is $1,156.
So the Panama spread is something our data scientists came out to really reflect on whether shippers are going to be more beneficial moving freight to the East Coast or West Coast based on price, right?
Correct.
And so it looks, if I look here, for the latter part of the year, it's fairly stable, except moving in, looks like October to November, it sort of bounced back to that 1156, which means if I'm a shipper and I move it to an East Coast port, I'm going to pay on average $1,156 this week versus last week, right?
Correct.
Or this week versus what if I moved it to the West Coast? Yeah.
Correct, yes.
So if you think of the truck differential in price of moving on rail or on truck, that would explain a lot of the difference.
Exactly, exactly. And with LA being kind of the pivotal point of the country this week, and for the next, we think is going to be probably the big jumping off point for the next few weeks, JP is going to explain here in a second. We talked to a guy at Steam Logistics. He's an expert in pricing, and he deals a lot with intermodal and shipping. So he's going to explain what we learned from him today.
Yeah, so we talked to Henry Byers, who's the Director of Pricing and Partnerships at Steam Logistics, an international freight forwarder based in Chattanooga. And he basically said that the outlook for West Coast volumes, it continues to be really strong going through the new year, but he expects a collapse in East Coast volumes and prices because people are now running out of time to get stuff on boats in China to make it to East Coast ports before the January 1st tariff. So you're going to see the West Coast prices come up, East Coast prices come down, and that spread is going to collapse. He doesn't think necessarily that the West Coast volumes will translate into truckload, but look for a knock-on effect in intermodal markets like Joliet and Memphis, where they have to take the containers off the rails.
So one thing we've seen is in this particular index, the East Coast index, looks like it's up, JP. Zach, we actually seen an increase. That's probably related just to the holidays, right? And the fact that if you put it into Savannah or Norfolk, you're more likely to get it into East Coast supply chain than if you put it into LA, right?
Exactly.
Yeah.
So, yeah, it's a lot cheaper right now to do that and then go out west. But now they don't have any more time. So
it's going to be interesting to watch. Anything on the horizon for next week?
So I think what we're going to see next week, I wouldn't get fooled by that big jump by the end of the month. We saw some tender rejections go up today as well. I think it's still going to level out. Historically speaking, the market levels out for a week or two prior to Christmas before starting to ramp back up again. And I think we're going to see a little bit of a flatter market next week.
So Zach, appreciate it. JP, awesome. You guys have a great weekend, by the way, and you as well. Thanks. Tune in to FreightWaves Now. We'll have it again, 4 p.m. Eastern every single workday. Thank you.